Okay, so welcome to lecture 17, and this one we're going to be covering order blocks, okay, and these are our demand zones and supply zones. And what you're going to pick up from this is that they do in fact work similarly to your classic support and resistance levels. They're just a kind of different way of approaching them and a different way of analyzing the chart, but they do kind of work in the same way, okay. So when we're looking for these order blocks, all we are looking for is let's say we have a move which is heading down like this. We're looking for the last green candle before a downwards move which is going to break the structure, okay, of the trend. Okay, so the structure here is the last low. You come up, you come down, you break the low, you create a lower low. This is the break of structure, and we do it again here. We obviously have the low over here. We come down, we break the structure over here. So the last uptick candle before a move which comes down and breaks the structure, this is your order block, which is known as a supply zone, because we expect there to be supply in this area. Okay, so I'll mark this out as supply. So this here is our supply zone, and it basically indicates that before a stronger move to the downside, there is a manipulated move to the upside in which smart money can enter their position, similar to what we're talking about with the liquidity sweeps, but obviously not exactly the same, but a manipulated upside move before a quick move to the downside. This is your order block, and when it is in a downwards move, you're looking for supply zones, okay? You're looking to find an area of supplies where price can come back to eventually and is going to find resistance for you to enter your trades to the downside, because we are expecting to meet some supply over here, okay? So this, for me, in this piece of price action is the most obvious one. We do obviously have one up here, but I'll show you why that's not as important soon, and we'll get into showing you why this actually does work. Okay, so now we're back looking at it. We can see that we've created a consolidation after this move down, and then we had a pushback into supply zone, which, as we expected, this area acts as a future point of supply where sellers did come into the market. This is what we mean by supply, an area where we're expecting sellers to be, and price came into this level, got rejected, and offered a great short entry. And for the people who are, trying to implement the other things we've been looking at into each of these trades, what we can also see here, okay, is that we had some form of a liquidity run as well, because what we could say for these highs over here is we could assume that people who are accumulating short positions over here, they may want to use these kind of relative equal highs as a liquidity level for them to put they're going to put their stop losses above here. Price comes up above into supply zone above a liquidity level. This is a really fantastic short, okay, when price closes back under. I'll be getting into some more trade examples in some later lectures where I'm pulling in multiple different things and showing you how you can look for confluence across different kind of techniques. But as we can see here, we have a liquidity level. Price comes up above the liquidity level into a supply level, closes back down, pushes back below, and offering a great little short entry for people who want to get in there, okay? And this goes to show, when price comes up to the support level, to this supply level, sellers are here ready to sell and push price back down. Okay, and now what we're going to look at is obviously the opposite side, which, as you guys can probably guess by now, is going to be the demand zone, okay? And this is the demand order block, and what we're looking for here, vice versa to what we just looked at, is the last downwards candle, okay, the red candle here, before a move which breaks the structure, before an impulsive move to the upside, okay? And as we can see, we got a candle to the downside here, we got a move that broke the structure, okay? So we got a structure break here where we took out this high, we get a new high, and we're going to be looking for a position to buy, okay, because we kind of have an uptrend forming here, and we can use this demand zone to kind of guide us as where we can expect there to be demand, okay, where we can expect buyers to be coming into the market. And if we watch what happens here, we can say perfectly there, okay, we got a poke right into the demand zone, picked it up perfectly, price heads back up and takes out the high once again, and for what looks to be a liquidity run, okay? We didn't get much, transactions above this level, prices wicked above, taking out some stop losses, looks to be closing back under, possibly the sign of a trend reversal, but you can't be sure there. But yeah, this is, this shows how important these demand zones can be, and the supply zones as well, of course. And to quickly just show you how we do mark them up, okay, I'll remove this out of the way. All I'm doing, it's nothing complicated. I like to take the candle body of the last downwards candle before the move which breaks this high. So you draw it from the top of the body to the bottom of the body. I don't personally like to include the wicks in this. I know some people do when they're looking at it, but I think, you get a much more refined area to look at, and the body of the candle does tend to be more important than the wicks when looking for zones like this, because the body shows where the candle closed. The wick up here basically, indicates to us that price rejected this level up here. The important bit is where the candle closed at the body. So you draw your box up. This is your supply zone, where the candle's closed, the last downward candle before the upwards move, and this can often work as a great little spot to find some entries, and of course using some other indicators for confluence, which I'll be getting to later. Okay, and so the last thing we're going to be looking at for our order block section is I'm going to take you a quick look at breaker blocks, and all these are, okay, they might seem a bit more complicated, but they're actually quite straightforward and very, very effective. Okay, all these are is when a order block fails, okay, and when an order block fails and you get a push through, that takes out an order block that you were expecting to find supply or demand, you can often pinpoint them as future points where if price does come back to them, you can find some fantastic entries. And I'll use an example that we have here. So we have this order block right here. If you guys can see, that right there is your demand zone, because after price came down here, this is your last downwards candle, your last red candle before a move which takes out the high, okay? So you have an order block here. So what you'd expect to happen is when price does eventually retrace, you'd expect it to find support here. But what do we get instead? Okay, we get a huge red candle that's completely taken out all of this price action. And this is your last, order block before this huge candle, which basically wiped out all this price action and started off a new trend, okay? And if you let this, go on long enough, you'll find it doesn't perfectly link up for the top, but it's close enough. When you extend this, when you zoom out and you look at this on a high enough time frame, we can see that this breaker block, when price did eventually come back up, it found to be, a great little level where there was in fact a liquidity run and it pushed slightly higher, but this was a great level to find a potential sell area. And as we can see after that, price comes back up, it smashes, slightly above the breaker block, and it comes back down. And what basically happens is this level, which we'd expect to find buyers, okay, so we expect to find buyers here because it's a demand zone. We expect there to be demand when we come back down. Because it fails, they can often turn into supply zones, okay? So this is flipped from being a demand zone into a supply zone. So now that we can mark this as a supply zone, it's a decent spot to put in some sell orders, and when price does eventually return, you can see it met some resistance, came back down, and resulted, obviously, FTX collapsing definitely helped this move down, but we can see that this does in fact work, and this works especially well on lower time frames, okay? So this is a great tool for picking out, sniper entries on lower time frame trades.